Happy Easter, guys. Previous week, markets roared back. US indices and gold bounced hard from low levels. Here, I'll be sharing market insights, looking at what happened previous week and the expectations for the upcoming week for Forex, commodities, and indices. My name is Avinash, and I'm here for my Market Bits channel. This is just my opinion and not a financial advice. Now, three important indicators what happened previous week were markets retraced from lows, taking into account the indices and gold. Forex was pretty flat though. Indices and gold covered the gaps of fall down of the week before due to some potential negotiations of ending the war with some guarantees. So there is a lot of confusion and mixed sentiment. The week before, the markets were falling, and last week the markets had retraced the same amount. But with Good Friday followed by Easter, as most markets were shut. So we have the non-farm payroll data plus the geopolitical tensions, which will impact during the market opening. Now let's see at the data at the previous week, which was on Friday, the non-farm payroll figures. So the non-farm payroll figures were basically forecasted at 65,000. How many jobs were added? The forecast was 65,000, but the figure came 178,000 jobs were added. Even the unemployment level has lowered from 4.4 to 4.3%. So these both data is in favor of the US dollar. However, average hourly earnings don't matter much, but if you have an indicator of the non-NFP and the unemployment data, both gives an indicator that it will lead to a stronger dollar. So this was what happened on Friday, but being a Good Friday, the markets were shut, so the impact will come on Monday in the opening. Looking back at this week, since it is Easter, so a lot of markets are shut on Monday. However, markets will remain active. Now on Monday we have the ISM, which is the Institute of Supply Management, PMI. PMI is Purchasing Manager Index. Now this basically measures the economic trends in manufacturing or services sector. Either it is showing expansion or contraction. Usually when the figure is above 50, it will show expansion. Below 50, it will show contraction. But we are comparing it with the forecast. So the forecast is 54.8. If the figure is 56, it is good for the US. If the figure is 53, it's bad for US. This is a low impact data given the current situation. Other data on Tuesday, not so important. On Wednesday, we have the interest rate from the Reserve Bank of New Zealand, forecasted at 2.25%. So the figure should come the same. We are expecting the same. Now, the interest rate from central banks, they were expecting to reduce all over the world. But due to high energy prices and now even impacting the food and other sectors, the central banks are avoiding to reduce the interest rate. They will keep it the same and increase further. So that depends on the inflation rate. FOMC meeting minutes will impact during that time, but again, this is the same what I explained, that they're having a higher inflation and depends on further forecasts. Thursday, we have the core PCA price index. So this is also an indicator of inflation, similar as the consumer price index, CPI, forecasted at 0.4%. So this is a delayed data because US government was shut down. So it will not impact much, but still it's an indicator of the prices of goods and services purchased by consumers, excluding the energy and food prices. And GDP is also important, which is a quarter-on-quarter data, which is the value of goods and services in the economy. So GDP is the economic health indicator for the US, which will determine leading to a stronger dollar or weaker dollar. Followed by data on Friday, which is CPI data and core CPI, similar to the PCE CPI data. So CPI data is the price of goods and services purchased by consumers, changes of that, looking into all the factors. But core CPI again is the same as the core PCE index, which excludes energy and food. So we can see that CPI, there is a huge difference. It's from 0.3 to 1% because it is taking into account the gas prices, the fuel prices, the energy prices. That's why you see a big difference. However, core CPI doesn't take into account of the big difference, so because it includes everything. It doesn't include the gas prices, energy prices, and the food prices. So now looking into the technical aspect, this is New Zealand dollar. So NZD USD, because there is a central bank rate on the Tuesday, we see a downtrend shift from in the entire March, lower highs and lower lows ranging between 0.59 to 0.56, and we expect that it remains in the channel. If the interest rate is same, then it may remain in the channel. If the interest rate is below, it will fall further. Again, this is impact of stronger dollar leading to fall of NZD/USD. We can even look into the daily chart, which will show like a kind of a head and shoulder completion pattern. So this is a head and shoulder with a double top and completing. Here is the shoulder, here's the shoulder. But if you want to complete the entire pattern, it is nearly 0.5580. So this is where the support is long term, medium term. Euro USD, again similar, range bound between 0.16 to 0.14, 1.14 being the support. Looking previously, we can zoom out. So there is a huge consolidation many times, 1.14. This is a daily chart, so you can, daily chart is normally a stronger chart. On the higher levels, we can see it around 1.16 level, but market is pretty flat going up to down, so we are not seeing much of movement in the euro. GBP also similar to euro, again the head and shoulder pattern completing at 1.30. So we can expect like 100 to 200 points drop from here. If you observe, you can see a big consolidation, and if it's breaking 1.0 level, we can see a further drop to even 1.28 level, because this will be like a completion of the change of character. So it will be a break of structure with change of character. So this is already breaking the trend line, which is giving an indicator that it can lead to a fall. And when the markets open with NFP news, NFP data, we can see mostly it's looking at stronger dollar, so pound is due to fall. Next important movement is oil. This is not clear. We will change it to the 4-hour. It will show clearly, and we will zoom in. So crude oil has been one of the biggest movers this week. That is the WTI. WTI has moved more than 10%. So it has started like near 111 levels, 100 to around 101 level to currently closed 112 levels. So it's on a higher and creating a double top. So double top. So market has gone to the same level where it had fallen from. But we see that it can further go, and then we can expect a consolidation between 115 to 120. Closing about 120 levels can go further up depending on the geopolitical tensions. Going to the gold. Gold again giving us a strong bearish signal with a lot of confirmations with the moving average, with the downtrend channel, with the short uptrend channel which was broken on Friday, and giving a positive unemployment data from the US, expecting for further fall. So it is retraced from the 50 Fibonacci levels. So we can see can further drop to the same level, 4,400. And on higher level, if closing above 4,800, which we had seen earlier, closing above 4,800, next target will be the 61.8 Fibonacci, which is 4,900 level. If it breaks further, then the trend is totally up. Until then, here it's a pretty consolidation level, but it has a breakout, so it can lead to further selling also. Silver, we see the same as how gold is moving, because silver 75 to 76 level is a strong resistance. This is a consolidation level again, and 50 above 50 level will give you a good buying opportunity. Again, depends on the news. So and breaking and closing above, giving a change of character with break of structure. Indices, we have seen S&P 500. This is an inverted head and shoulder. However, market's been downtrend. If you see the bounce, we have seen already around 5% bounce from the lower, which is in the S&P. In the Nasdaq also we have seen a bounce of 6% approx. So markets have just recovered what was fallen the week before, as I mentioned. Still on a downward, because it has to cover up this and it has to maintain above these levels, above 24,000 300 or 400, which has been the case. To 24,500 above that will give a good indication, but we have too many resistance, like too many obstacles to cross. Closing above the about 24,000, if there is an uptrend, it is need to have a good strong fundamentals with the technicals confirmation. Well, Dow Jones is also similar. If we measure that, that will give you a almost 5%. So they all are moving in hand. But long term, you can see this has been the head, this has been the shoulder. It can recover from here, and then it can even fall, giving a complete head and shoulder pattern of breaking the neckline. That's about it. Thank you and enjoy the Easter, guys.